Aloha, it's Deep, and today we are breaking down VA loan assumptions. If you're buying or selling a home in Hawaii and have VA loan benefits, understanding the difference between assuming a VA loan and getting a brand new one could save you tens of thousands of dollars. Let's dive into it. When you get a new VA loan, you're starting from scratch with any lender. That means getting pre-approved, submitting your certificate of eligibility, going through underwriting, locking in today's interest rates, and covering your closing costs, unless the seller agrees to help cover them. But the upside is huge. A new VA loan gives you 0% down, no private mortgage insurance, flexible credit requirement, and often a competitive rate. Plus, the benefit is reusable, so you can use it again in the future if you qualify. It's one of the best tools available to veterans and active duty service members who want to buy a home. A VA loan assumption means you can take over someone else's existing VA loan, their loan balance, their interest rate, their remaining loan terms, and their monthly payments. Let's say the current market rate is around 6.5%, but the seller locked in a VA loan at 2.5% a few years ago. If you assume their loan, you get to keep that lower rate, which can save you hundreds of or even thousands of dollars every month. There are a few things to watch out for. You have to qualify with the existing lender, just like you would with any lender. In this case, buyer's VA entitlement replaces the seller's entitlement that is tied to the loan. If the buyer does not have VA entitlement and seller agrees to let the buyer assume the loan, the seller's entitlement stays tied to the property. You also need to cover the difference between the purchase price and the remaining loan balance, either in cash or through a second loan. It's not for everyone, but if the math makes sense and you qualify, that can be a powerful way to buy a home. Assuming a loan sounds great, but there are some risks to keep in mind. First, you're locked into the remaining term of seller's loan. So if they have already paid 10 years on a 30-year mortgage, you're picking up the remaining 20 years, not starting fresh. Second, even though VA loan is assumable, it still needs lender's approval. And some lenders might still require a full underwriting process that's just as detailed as applying for a brand new loan, if not even more. And lastly, if you are not VA eligible and seller's entitlement stays tied up, that can impact their ability to use the benefit again in the future, which may affect the negotiations process. Funding fee for a first-time VA loan users with no down payment, the fee is typically 2.15% of the loan amount. For subsequent users, this fee increases to 3.3% that can be adjusted by putting down payment. For VA loan assumption, it's only 0.5%, which can save you thousands of dollars when you're buying a home. A few years ago, VA loan assumption weren't on most buyers' radar. But today, they are gaining traction, especially in places like Hawaii, where home prices and interest rates are high. When sellers have locked-in rates as low as 2 or 3%, and buyers are facing 6, if not 7%, that spread makes a huge difference in monthly affordability. For buyers who qualify and can make the numbers work, assuming a VA loan could mean a significantly lower mortgage payment. This is especially true for military families relocating to Hawaii or veterans looking to get back into the market. So how do you decide between a VA loan and assuming someone else's loan? If you're buying a new construction or want full entitlement and flexibility, go with a new VA loan. It gives you a clean slate and all the benefits that come with starting fresh. If the seller has a much lower interest rate and you can qualify and cover the gap, assuming their VA loan could save you thousands. But if not, a new VA loan might give you more control and flexibility. It depends on your goals and your numbers. Every situation is different, and there is a lot of details when it comes to VA loan rules, eligibility, and how it all works here in Hawaii. If you're thinking about buying, selling, or just have questions about VA loans, reach out. I'll be happy to help you figure out what makes the most sense for your situation. And if you found this video helpful, make sure to subscribe and follow for more contents like this. Mahalo.